Hi everyone, it's a tough week to be in Midtown with the UN meeting and with 100,000 climate protesters in the streets of Manhattan. Yesterday it's New York City Climate Week, which of course causes enormous amounts of traffic jams, not least for all the heads of state that arrive by private plane, fly in by helicopter and then take an enormous convoy of SUVs to complain about environmental footprint at the UN. But anyway, I'm avoiding all that. Also, by the way, it's raining, which is going to add to the traffic chaos. So believe me, I'm not going into Midtown this week. Anyway, it's also, having said all that about busyness, it's a somewhat quiet week on Wall Street because it's Jewish high holidays. We had Rosh Hashanah this past weekend, and we have Yom Kippur next Sunday, Monday. And historically, quantitatively speaking, that's been a weak for equities, although it's a little bit difficult to strip out the data because September, typically that falls in September, and September tends to be a weak, generally speaking, historically, September's been a weak month for equities. So generally speaking, this week we're kind of bearish, but we do think that oil can kind of keep going higher. I did say that if we get to 95 Brent, we'll get to 100, and it was interesting to say that to hear Chevron CEO Mike Wirth saying that $100 a barrel is on the cards. I think that the last push will be speculative because what we're seeing in the oil demand data is that high prices are clearly having an impact in the US, and we're just sending out a note right now about a couple of major gas station companies, Couche-Tard being one of them, saying that they are, whilst they're taking market share and their sales are up, overall gasoline demand in the Mid-Con is down around 4% according to them. What's happening is the gas station industry, which is very fragmented, is consolidating, and as a result, the major players are gaining better margin and charging you more for your gasoline because there's less gas stations and more services at the gas stations that you go to. The example being, I think it was Couche-Tard saying they're the fifth biggest pizza company in the world. The mum and pups are also going out of business, interestingly, because tobacco sales are so bad, and so they're losing a lot of margin that they would have from selling cigarettes from weak tobacco sales. One of those kind of crazy things you get by reading these transcripts. Generally speaking, as I said, we're quite bullish oil here and bearish the market. So our classic trade that I made really aggressively from 2020 through 2022, and at times this year without a huge amount of success, which is short the Nasdaq, long the oils, is definitely one that we can play this week, I think, although it hasn't worked very well today. Obviously, the dominant factor of the week is going to be what happens with the three Feds, if you want to call them that, the US on Wednesday, the European on Thursday, and the Japanese on Friday, will all have an impact on markets, although total consensus that the Fed doesn't change anything this Wednesday. It'll be interesting to see, for example, one of the interesting aspects of oil strength here has been it's coincided with dollar strength, which is not the historic relationship that we expect. Although my argument is that nowadays we're so strong in oil and gas here in the US, and we have such high exports of both oil and natural gas, that the dollar versus oil inverse link has actually broken. We'll see. As soon as I say something like that, normally it reverses, but it does make sense, especially with the Chinese and others working hard, particularly the Chinese working hard to get off dollar payment for oil. It's logical that link would be at least weaker than it has been historically. We're watching Chinese exports of products, but generally speaking, that's a threat to the refiners. But at the moment, refining is very strong, not least because Saudi cuts are tightening heavier, sour crudes that are more better for making distillate, and distillate is the tightness in the market as we head towards winter. So if we continue to see distillate inventories needing to rebuild, which arguably they do, certainly that they're at relatively low levels, and also we're heading into winter, then we can expect to see continued tightness in the oil market, and that leaves us, as I said, relatively bullish oil, relatively bearish the Nasdaq, especially if the market takes some surprises from the Fed or the other central banks as negative. I'll leave it there. Have a great week.